This is Brad Berry, Chief Investment Officer and Portfolio Manager with Dynamic Wealth Group. Welcome to this market and economic update. In this video, we'll discuss why some investors are worried about a recession and how this has impacted financial markets. The S&P 500 and NASDAQ are down year to date, driven by tariff concerns and mixed economic signals. Despite this uncertainty, it's important for investors to maintain perspective by distinguishing between personal economic experiences and factors that drive financial markets. Economic uncertainty and periods of slower growth are normal during business cycles, so it's important to take these in stride with a truly balanced portfolio, one that does not solely depend on stocks or bonds, and having a customized financial plan can be key. Over the next few minutes, we'll discuss some key insights on these topics. First, as this chart illustrates, tariffs and other policy changes have caused economic policy uncertainty to rise. In fact, some measures of uncertainty are as high as they were during the 2020 pandemic and 2008 global financial crisis. However, it's important to keep this in perspective. Some investors and economists have been forecasting a recession for 3 years now. Not only has there not been a recession, but the stock market has performed extremely well in recent years. This highlights our overall approach and preference for being prepared for the future and not attempting to solely predict the future. As we know, economic forecasts can often be wrong. Even more academic indicators like the inverted yield curve or the so-called SAM rule have not proven to be correct this time so far. That said, recessions are a normal part of the business cycle. Basing investment decisions on constant recession predictions or constant bull market predictions can lead to poor financial outcomes. Instead, it's far more important to have an approach that can withstand all parts of the economic cycle. Next, this chart shows quarterly GDP growth at a seasonally adjusted annual rate for the past several quarters. Growth has been stronger than many expected. Consumer spending has helped to support the economy, and many hope that business spending will pick up too. So, why are so many worried about a recession? This is because some recent economic data has been mixed. Inflation exceeded 3% for the first time since last summer, stoking fears of rising prices. Also, federal jobs fell by 10,000 in February, sparking fears of a broader slowdown in the job market. Consumer sentiment has also worsened, with the 5-year inflation expectations at 3.5% and the highest since 1995, and the deep pessimism around future financial situations. Now, it's important to remember why markets were optimistic after last November's presidential election. While tariffs may be a shock to the global economy, many still hope that changing policies around manufacturing, energy, and taxes could help boost growth in the longer run. Finally, it's important to remember that market pullbacks are a natural part of investing. As this chart shows, the market typically experiences multiple pullbacks each year. Research shows that staying invested through market turbulence yields better longer-term results. Now, as regular listeners may be familiar with my cookie analogy, which compares baking cookies to building an investment portfolio. You see, you need to get the right mix of ingredients for both. You cannot just have sugar and sweetness in a cookie. You actually need salt and flour, which could be thought of as non-correlated ingredients. But the other key to baking a great cookie is to leave it in the oven long enough. It's a long-term process, just like investing. Now, I really hope you found these high-level insights helpful. If you are a financial advisor and would like more information on our multidimensional approach to asset management, feel free to download our eye-opening white paper titled Busting 7 Risk and Return Myths. You can click on the link below or visit our website at dynamicwg.com or email us at info@dynamicwg.com. If you are an individual investor, we are happy to address any questions you may have and put you in touch with a qualified advisor if so desired. Until next time, take care, everyone, and make smart, logical, and fact-based financial decisions.